Good morning, afternoon, and evening, wherever you're logging in from. I hope you're all having a fantastic week so far, and hopefully you had a fantastic week 45 and you're ready to rock and roll into week 46. That's going into November 9 through November 13. So a few things to keep in mind while we're going into this week. Obviously, the first big thing that we always want to keep our eyes on, are there any holidays or anything like that going on? And if we look at the holiday calendar, we can see Wednesday, November 11th is Veterans Day. So the banks will all be closed, which means the markets will be closed. And if they're not going to be closed, they'll have some weird hours. Either way, not a day to be looking to trade. I'm personally going to be staying away from it, and the room will be closed and not really looking to do anything then. So keep that in mind. On Wednesday, it is going to be a holiday, and it's always kind of awkward when the holiday is smack in the middle of the week. Makes things, a little bit weird. Going beyond that, looking at some of the news for this week, another big factor with, of course, everything else going on and the elections and election decisions and lawsuits and everything else. Along with that, there is also news to keep an eye on. Looking at the news going into this upcoming week, really for the U.S., we don't really have very many big news announcements this week. The only big thing that we have is on Thursday, and that's with Fed Chair Powell speaking. If you're a crude oil trader, obviously Wednesday is always a big day to keep an eye on, but this week, Wednesday, is a holiday. So if you are a crude oil inventories trader, that's going to be at 11 o'clock on Thursday. It is a day off, but there's really not a whole lot as far as the news calendar goes. It's pretty calm and quiet there. Monday being very quiet. I guess there is a concern looking at, the fact that there's a Friday the 13th and there's a weekend in the middle, and 2020 hasn't exactly been the most stellar year in the world. Man, I don't know. Maybe we should be a little bit concerned. Oh, well. That's really about all, though. I mean, the news calendar is really, really quiet. So, without further ado, now we can jump into some charts and kind of see what's going on here, give us a little bit of perspective going into the week ahead. All right, first to the lineup is going to be the NASDAQ, and the NASDAQ market overall, man, what a wild ride this thing has had all over the place. Started off with that obviously nice rally to the upside and then got just dumped on all the way back below 11,000. And once it got back below 11,000, the market jumped right back up. Well, guess where we came back again? We got a nice dip back towards 11,000, and now just sellers getting raked across the coals. Huge rally to the upside. And with this upside momentum, obviously the first thing is trying to figure out where is the market going to try to go to. Obvious thing would be looking for a channel of some sort off of the lows, and that could give us objectives, cutting it in a little bit short just to make sure that we're in around the highs. That gives us some current objectives if the market were to go straight up there right now, around 12,350 or so. Obviously that depends because this is an angular line and it might take a little bit more time to get up there. But realistically, if the sellers were going to hold it down, they should have done it right about there. That was the big spot where sellers were supposed to hold defenses, and given this bull move back to the upside, man, it sure doesn't look like they were able to do a whole lot. So obviously buyers are trying to come back in, and with that amount of bullish strength to the upside, it really kind of depends on what happens going into the weekend. When we open up on Sunday at 6 p.m. Eastern, where does the market want to open up? Because that gives us a few things to consider. If we're opening with a big gap up, if we're already up here, then it's kind of job's done. We've already achieved the objectives that bulls were looking for. If we're opening gap down, that might be seen as an opportunity for buyers to come in on the cheap when they weren't necessarily expecting to get a pullback in the first place. Might also, on that same note, scare a little bit of the buy side because they weren't expecting to get a pullback. So if it does open up a little bit lower down here, especially if the gap is even a bit wider, you might see it flush first, find support before reversing back up. We know the NASDAQ loves those V bottoms, and that's kind of the way that it's looking at the moment with this big rapid rally to the upside. Very little pullback and then a strong move up. It's probably a higher likelihood just going to continue higher. But if it does open up with a gap lower and we get some of that weirdness going into the weekend, that could give a lot of context as to where the buyers or sellers or what they're trying to achieve and where they're trying to get the market going to. Primary objectives are still towards the top of the channel, and if it starts opening gap down, maybe we start seeing some of that previous support back around that 11,500 area. That wouldn't be a surprise given the amount of wicking that happened around there. Nice swing high, a bunch of swing lows, obvious support. That would be a really nice spot if the market were to open with a gap lower and flush. That would be that spot where buyers will be looking to jump back in again. Either way, the market is currently bullish and trying to rally higher, but just remember we are with a higher low, right? It does have that higher low, but at the same time, we also have a lower high, and the market's trying to break out of that right now where we are, and it's actually so shallow I can't even draw it, so let me try it this way. And that's where we're stuck. I mean, literally, that's the top. So this is a big spot. If the buyers are going to break higher, it's possible that they're going for a channel high, and that might be a little bit further up around those 12,400s or 500s. But we've got to break this falling resistance first. Everything is looking good to try to get that job done. It's just a matter of seeing whether or not they're able to follow through and get that strength to push through the top and keep it there. And then we'll be able to see if we can rally up to those all-time highs, grab those big objectives up towards 12,500. Next up on the list, we've got the S&P, and although it is a very similar chart, so we probably won't have to spend a ton of time on it, there are a few key differences. Obviously, between the NASDAQ and the S&P is not as insanely aggressive as we see with the NASDAQ, but we're still showing that same range structure, and the market is still in the same spot trying to break above the highs. And if anything, it's a little bit cleaner on the S&P. Trying to get that rotation back up. We still need to see the buyers muscle through this top if they're going to get going. And if the market is going to pull back, we've already kind of achieved the objective in the short term with the wedge top. If it's going to break higher, there's not a ton of room left to go before it starts hitting the next objectives, and that's only at 35.40, 45 or so, just above those highs back towards a potential channel top. So the S&P has a lot more limited room. There's not as much room for it to grow. And usually because of that, if it is going to pull back, the S&P is going to be the candidate to look for a pullback on. There were some obvious bears that got trapped below that bear bar there. Could be looking for a nice break-even run for buyers to come back in on. Maybe even a dip back down towards this previous major support, 33.40s. The big thing right now is that it's super high. It's not breaking above the highs, so not really able to do much up here other than potentially look for shorts. But again, going into the weekend, it really depends on where things want to open up. The way that the market is looking right now, it looks really strong, and it does really look like they want to break out of the highs. It's just a matter of following through the gas pedal, and we just haven't seen that yet. They've got to start closing above this falling resistance, showing a little bit of oomph behind it, seeing if they can go up a little bit further. Switching gears over to the metals side of the world, now with gold, and very sideways, but it does have a little bit of a higher low forming. Realistically, this is just a gigantic range, and it's having a heck of a time getting out of here. Bulls are trying to get that higher low, and it's kind of setting up maybe a channel that we're possibly at the high of, and that would explain some of this congestion. But at the same time, this might just be one big range where we started off with a range here, and then it got a little bit narrower, and you can see there's a ton of micro ranges inside of here. But then when it broke down, we created this secondary range, which in reality, it's all just one and the same. It's one big giant one that's looking to rotate back up towards the upper part, and that upper part happens to have a gigantic psychological level, 2,000, sitting right there. So that's kind of the way that it's looking at the moment, and if we're breaking above the highs of this, normally seeing a bull channel breaking up would be considered kind of unsustainable movement. It's very hard for the market to hang on to something like that. But given the case, that's really just the market breaking above a midline and starting to rotate higher into the next zone of interest. Now, the big next step for buyers is really, are they able to stay above this area or not? If the bulls can manage to stick the landing above the highs of this channel, then again, looking for a rotation back up towards that 2000 makes a lot of sense. I know the market's super high, and it's really tough to want to be a buyer way up here. But if the market can get some form of a good breakout, we've got a couple closes above the highs, so that's a good sign, and the market's bunching up, showing that the buyers are potentially in a hurry. We're not seeing the sellers breaking down, showing that they're failing. That's also a good sign. So there's a lot of things that are checking the boxes for buyers, although it's really high up and it's really aggressive. If the sellers were taking over, where are they, right? The buyers just keep picking it up and rotating it up. And, well, I'm going to continue assuming that that's going to be the case. Upside objectives, next up, the most obvious objectives, at least, are going to be into the 1970s. If the market wants to go a little bit further above that, there's not a whole lot of room, maybe into the 1980s to 85s. And then above that, obviously, the 2000s. And that's going to be the big target that the market will be looking for over on gold. And then quickly heading over to the other type of gold, just of the black kind, we've got crude oil. The big thing here with crude is that flush through the lows. The big thing that we've got going on is a very nice, obvious wedge formation. That low was nearly perfect, and the top was just the same, nearly perfect. But when it came to flushing through the lows, the sellers had the initial breakout, which worked out fantastically. But when the buyers came back in, they didn't just come back with a weak hand. They came back with two sawed-offs and an M249 strapped to their back, kicking in the door. There was a lot of bullishness back to the upside, and it just screamed back above the lows of that wedge. And as soon as the sellers realized that they were really on the back foot, they started jumping ship very fast. Small little pullbacks, trapping some sellers in. A lot of sellers probably using that as just a chance to mitigate some of the loss with that little baby pullback. We have another one right there. And then where did it snap back to? Right back to the inside of the channel. And now we're opening back up right on top of it. Again, depending on where the market wants to gap, if it does gap on Sunday's open, that could change things a little bit. But realistically, where we are, if we gap up, then any flush back is just going to be buyers picking up a pullback. And if we gap down underneath it, seeing the response to that is going to be important. If it gaps down here but then immediately shoots back up, that just shows that buyers were looking for that sale and they got it. And we're probably not going to come back to the low if we see something like that. Now, another situation would be if it opens with a relatively decent gap down. If it opens too far down, that could cause some problems too, because, well, if it opens in the middle here, it's not really at an area of support yet. That would be a bit further down. And it's not really at an area of resistance that would be further up. And that would give it a lot of time for price exploration where it might just kind of chop around for a bit. Obviously, I hope that's not the case. It's never fun when the markets are sideways like that. But the big way really that is going to step on the foot of the buyers is falling below the lows of this channel. If the buyers can start cracking this back up, it has a very good likelihood of continuation because that would be that higher low, higher high transition, very aggressive higher low. Lots of good check marks in the box for the buyers. Shifting gears a little bit over now to the corn market on the agricultural side of things. Corn, along with the agricultural side of things, are seeing a big impact in the world markets with China and the elections and everything else are kind of having a big toll, or, well, I guess in this case, not really a toll, a big benefit on the corn markets rallying pretty aggressively now back over 400. So with this big jump to the upside, we've got bullish continuation, channel formations, everything looking really nice. But the one big caveat to that is we had this really nice channel. It was looking great. Everything was fitting beautifully, right? Perfect holds on the top. And then it got just a little too aggressive. And normally, right, if you're a buyer and you're long in here, that's great, right? That's totally fine. But when it starts dipping back like this, that begs the question of, wait a minute, if this was so aggressive, where are the bulls? And now we're fading back down, but we're not coming off of anything. We didn't come back down to the channel lows. We're hovering in the middle where earlier buyers may have come in, which might be a good sign. But when the rally came back towards the top of the channel, it kind of held. That's not what buyers want to see either. So we're seeing a lot of weakness up at the top, and that will be looking for a potential continuation and a new bear channel cycling down lower towards those 380s. It might not be that low, maybe 390s. It depends on when it gets there. But that would be the downside objective. Now, the caveat to that is if the sellers fail and they do end up holding support at the bottom of the channel, getting a break above that descending wedge top, that's going to be the big point of interest for buyers to get continuation and keep the rally going to the upside. Either way, this is obviously a bull market. The big question here is whether or not the buyers are going to allow a shallower pullback, i.e. buying the lows at around 390, or if they're going to allow a deeper pullback and get to some of these more kind of bigger zones of interest. We left behind some gaps back here, which could use filling in back at 345. Major structural support levels into the 360s and 65s. Again, structural support into the 380s. More structural support back at 335s. There's so many levels to choose from that buyers would love to sink their teeth into. It's just a matter of which one Corn wants to use. And at the moment, we're really not at any of them. So that to me really kind of says, it does look like it's trying to go up, but I might want to keep my eyes on that downside just for a potential overswing. We shot above the highs this much. It could very easily swing below the lows that much. And that means that this area around 380 or so is becoming a little bit more favorable. That's about the equidistant breakdown zone that would give a big area of interest for corn to come back in for another continuation leg to the upside. And then on the cryptocurrency side of things, we've got good old Bitcoin. Man, oh man, what a rally to the upside. Bitcoin held 10,000. We came back to 10,000, and we weren't there very long. Man alive, they hit that in early September, and well, here we stand at 15,000 after pushing to almost 16,000. Huge rallies to the upside on Bitcoin, and with this continuation up, it is begging the question of, is this getting a little overextended? Especially seeing this strong of a rally this late in the game, what I mean is by this trend being just kind of so late. Like, why is it happening way over here? It seems a little bit suspicious. A lot of times when you have those kinds of moves, it doesn't mean that the bulls are done, but it means that there's going to be a lot of profit taking. Buyers weren't expecting this. So buyers who were long in here and here and here, this is kind of icing on the cake. They were looking for targets into like the 14,470s, and it pushed all the way up to 16,000 on a squeeze. Well, I don't know about you, but getting an extra 1,000 or so out of each Bitcoin, that's a pretty good that's a pretty good deal. And there's going to be a lot of buyers taking profit on that, causing this flush back. Now, this area that it's flushing back to is going to be the big zone because, well, that was where sellers were holding initial interest. We've broken above that now, and guess where support is now just magically showing up right around that same spot. So if buyers are going to continue this back up and create a V bottom, this is the type of formation that they need to get that done. This big bull bar with a nasty wick on the bottom, just shutting down any seller's hope. That's the type of candle that they need to get things going. Now, the bulls need to follow this up with another bull bar and another bull bar and really stack them back up towards 16,000. Looking at that area, I mean, realistically, if it can get back up to 16,000 and start cracking above it with the squeezing that we've had so far, if it gets some juice behind it, we could see all-time highs back above 20,000s again. You know, last month I would have said that would have been crazy, but at the same time, last month we were trading at 10,000 and now we're already, 50% of the way there. It's Bitcoin. It does what Bitcoin wants to do. Keep an eye on it, but definitely looking for bulls. It's just a matter of where they want to buy into the pullback. And right now, this V bottom, it's either going to take off from here, we're going to see a second leg down. And if it does get a second leg down, then we've got areas of support back towards 14,000, maybe even 13,500. But if buyers are going to take it, we might not be sticking around this 15,000 for much longer. Kicking off on the stock side of things, the first one up on the list, EAT, that's Echo Alpha Tango. Really, really nice consolidation that's forming up here. But there is something that I'm really seeing as a caveat up here, and that's going to be the divergent highs. If you're not sure what I'm looking at here, we have this peak and this peak. If you notice, it goes up, right? That's a higher high there. But if you look at the indicator down here, this is the MACD, just so we're on the same page, is making a lower high. That type of divergent high doesn't necessarily mean that the market needs to fall right now. That's not how the world works. It'd be great if that's how it worked, but that unfortunately isn't the case. And a lot of times you'll see these divergent highs form over 3 peaks, and those are some of the best ones where we'll get another leg up. And EAT, for the long run, I really like the long side. I love the long side. I just have a really hard time buying up here. I want to buy in, cheaper. I was unfortunately not able to buy that, and I wasn't able to get into any of this. But I would like to get into a pullback if it can give it. And that's going to be the big caveat, because one of two things is going to happen here. We're going to see a continuation to the upside because this is an extremely aggressively strong bullish market, and we might just see this go sideways to the lows of channel that bounces it back up. Or what I'm more hoping for in this case is seeing a secondary breakdown to backfill some of this open space. You'll notice it kind of left behind this gigantic open gap. Even before, that's where it left it behind. And it leaves this window that kind of needs to get shut. Orders are down here that really haven't had a chance to execute, and markets don't like that. So a lot of times you'll see them backfill, sometimes very quickly, and get those orders taken care of, and then jump back to the upside. So what I would really like to see is a quick flush down to 36, even all the way down to 31, 32. Just something down here that buyers can try to come in on for a continuation pop to the upside for a little bit more movement. Realistically, just trying to get in the trend, just at a better price. I don't want to buy high. That's what it comes down to. And moving on over, we've got Cloudflare. That's symbol NET, November Echo Tango. Big gap to the upside after their earnings. And although the candle, okay, to be fair, the candle looks horrible. That's a really bad bull bar. But given what's going on in the markets and given what Cloudflare does, if you're not sure, by the way, just a side note, they deal with a lot of security, web infrastructure. They do all of the DDoS mitigation stuff. They're all over the back end of websites. Well, when everybody got shifted to working from home, guess who got ramped up, right? So it's not a surprise seeing them doing very well. But the big thing that we've got going on right now is we're seeing the earnings and the market still gapping up and still continuing higher on huge volume. So all of this upward momentum definitely raises the flag of, man, I thought it was high, but buyers are still coming in full force trying to rake this market up. That means to me that although I don't want to buy high, and I want to buy a pullback if possible, there might not be that opportunity. And a lot of times what markets like doing is backfilling this quick little flush, sometimes even just back to the lows of the candle. Those are going to be the big zones of interest to see if we can get a dip back down towards those 61, 75s, even back down towards, sub 60s into the 58, 50s or so, back up into the previous gaps. And remember, there is also an unfilled gap back here. And if the market really wants to fall apart, got to look at both sides. There's still some unfilled gaps way down in the 45s as well. But realistically, with this much momentum to the upside, and given what they do and given what's going on in the world, with everything kind of falling apart again, I feel like this might be an interesting play going into the future, especially going into the holidays, going into the end of the year. Well, guess what's going to get pounded even harder now? That's going to be internet companies like Amazon and all of them. And guess what they're going to rely on to make sure their websites don't crash? Maybe not Amazon, but you've got companies like Cloudflare out there that are looking to support those types of moves. And with that volume coming in towards the end of the year with everyone at home already, I definitely got my eyes on it. And with the earnings gapping up with that much volume and that much strength, it seems like I'm not the only one. And last but not least, speaking of earnings and a lot of strength coming behind the earnings, normally you're not going to see me hanging out in the $4 stock range, but Cody or Coty or Cotty, I don't know, whatever you want to call it, COTY, Charlie Oscar Tango Yankee. It is a beauty company. And again, we're going into that time of year where these types of things become more prevalent. But guess what? Now everybody is working from home. So nobody really cares about the types of pants that they have to wear anymore because Zoom isn't looking at that. What's it looking at? Their face, right? Well, if you just rolled out of bed, you're going to need something to make things a little bit smooth around the edges before you jump onto the last minute Zoom meeting for work. And, well, guess what jumps up onto that list? Well, beauty care. So things like this coming into the end of the year with earnings and this type of candle, I mean, that is a monster bull bar to the upside. And these types of stocks definitely come with a forewarning, right? If you're playing a $4 stock, we already know the stock market's not exactly the place to be safe in, right? This is an aggressive thing. It can take all of your money and more. $4 stocks, there's a reason it's a $4 stock, right? This isn't Microsoft or something. A lot of traders aren't looking to get in this and hang on to this for ages. It's more of those pump and dump kind of quick in, quick out type moves. But it seems like with the earnings, with the time of year, with the volume coming in, with that type of candle closing with that monster of a gap up, and everything still pointing to the upside while we're seeing a descending wedge that it's gapping above, you've got my attention, and this one is definitely on the radar for continuation to the upside. All right, well, that's going to do it for this week. Like we always say, stay safe out there, keep those stops in play, and let those winners run. Have a great week, and we'll see you all next week. Thanks. Bye.